Okay, good afternoon, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just go ahead and give me a Y or a yes there just to let me know that it is indeed working. Hope everybody's having a fantastic afternoon so far. Looking forward to going through our basic training webinar today. I've had a couple of requests come in this morning for people that had specific questions about the markets. Um, we've been using a lot of trailing stops recently, and so I've want to talk about trailing stops, what they are, and how you can set them up. So we're actually going to do a couple of things today. We're going to go over how to set up a trailing stop. Well, first of all, what is a trailing stop? The different types of trailing stops, the benefits of a trailing stop, like the type of market conditions and when you would use it. And then lastly, I'm going to demo in an MT4 account how to set up a trailing stop effectively. And then the last thing I'm going to do is show you how to set up a trailing stop on either the TradingView platform or a web trader platform with a Wanda or forex.com, something like that. So you'll learn how to do it in multiple different types of platforms today. So that's what we're going to do today. If you have other questions that you would like me to talk about, feel free to put those questions in the chat box and I'd be more than happy to discuss those questions. Moving forward, before we get started, as always, I need to go over our disclaimer. As always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So actually, let's stay on the slideshow here before we demo. So first of all, let's talk about what trailing stops are. So a trailing stop order is a conditional order that uses a trailing amount rather than a specifically stated stop price to determine when to submit a market order. So basically, I think in order to understand a trailing stop, it's important to understand what a stop loss is in the first place. So when you take a trade, I feel like some of the most beginner traders, what they do is they'll open up an account with somebody like Robinhood or TD Ameritrade or E-Trade, and they'll go out there and buy a stock, or they'll go out there and buy a currency or whatever it is that they want to buy, and they'll just put a couple shares on Tesla, put a couple shares on Facebook, and they don't really have a plan. The plan is just, let's see if it goes up, right? That's kind of what a beginning trader kind of looks like, and it's not a bad thing. Everybody goes through that in the beginning, but the reality is there's really no plan in place, and eventually you will get yourself burnt going through that unless there's an actual technique or systemized approach in play. But that's kind of what a lot of people do when they start trading. Right, so they just throw a trade out there. Now, when traders get better at trading, what they'll eventually start doing is placing a stop loss. And what a stop loss does is it's a specified price. So let's say you buy right here, and if the market goes below a certain amount of money, you can go ahead and close that trade if it goes and starts to lose money. Now, who would want to take a losing trade? Who would want to close their trade out for a loss, right? Nobody does. But the reality is, if you want to be profitable and you want to do this for a long time, if you want to be consistent over a long period of time, you have to incorporate risk management. So you have to, we have to humble ourselves and be willing to get out of a bad trade when things go wrong. The worst trades I've ever taken, and I would imagine that for those of you who are participating today, whether you're here live or watching this on YouTube, my guess is most of you would agree that the worst loss you've probably ever taken was something where you either broke your rules to where that risk management was now exposed, or you just didn't even have a risk management plan in the first place. So you just basically let those trades go against you and go against you until there was no return, right? You reach the point of no return, right? And so that's what a stop loss does, is that it's you basically saying, hey, I am not better than this market. I'm going to humble myself. I am going to get out when this trade clearly is not doing what it's supposed to be doing, right? This happens to all traders all the time, even professional traders. I know that sounds crazy sometimes, right? But especially professional traders use stop losses to get out of bad trades. And, if they take a loser, they want to exit that position promptly so that they don't lose capital, right? So the number one rule of trading is to not lose money, right? I think Warren Buffett said, rule number one is don't lose money. Rule number two is don't forget rule number one, right? Everybody's heard that. And it's kind of boring at this point, I think, but it's so true. You can't basically, the number one rule of trading is to protect the capital that you already have. And then from there, obviously would like to make money, and that's the whole goal, is to make money, but beyond. But number one is to protect what we already have. So a trailing stop is just a modified stop loss. So, you think of it as a stop loss is a place where, if you buy at $5, your stop loss is at $4. You will stop out if it goes to $4. Now, the cool thing about a trailing stop is if you place in a trailing stop and the market goes to $6, you bought at $5, and let's say the thing you bought goes to $6, that trailing stop can actually go up and up and up as the market's going up and up and up, right? So if that distance is $1, right? So if you buy in at $5, stop loss is at $4, and it's a trailing stop loss, and the market goes up to $6, all of a sudden that market's now going up the same amount. That stop loss is going up the same amount as the market is, right? It's a beautiful thing, because now if the market were to ever turn against you or something crazy happened, a news event came out that you weren't expecting, whatever it is, and the market goes against you, often you can lose less money, which is really, really nice. So I think that's the huge benefit of a trailing stop. Now, real quickly before we move on, I want to just describe one of the downsides of a trailing stop. One of the downsides to a trailing stop would be, let's say you buy at $5 again. Let's say you buy a stock or a currency at $5, a contract, or $5 a share, whatever it is, right? You just buy at $5, and the market goes in your favor to $6, okay? And your stop loss originally was at $4, and the market goes up $1. Well, now that stop loss has moved up to break even. So the worst thing that could happen is you close at break even. But let's say the market pulls back from $6 a share, and now it goes down to $5, where you're going to stop out. Now, you won't lose any money because it is at break even. But let's say after it hits the $5, that thing then explodes to $8 a share. Okay. Well, you're stopped out, right? So you're out of this trade. So you no longer are in it. And unfortunately, you're not going to capture that extra $3 a share that you could have made. So that is the big downside to a trailing stop. So when you're trading, you have to have kind of an idea of what type of market condition a trailing stop makes the most sense for. And we'll explain that in just a moment. Now, let's move on here. So how does a trailing stop order work? We already talked about this a little bit. Let me just read this here. This is a buy side trailing stop, so just so everybody knows. But a buy trailing stop order sets the stop price at a fixed amount below the market price with an attached trailing amount. As the market price rises, the stop price rises by the trail amount. But if the currency price falls, the stop loss price doesn't change, and the market order is submitted when the stop price is hit. So that's basically what we just talked about, but in words. So as I mentioned before, as the market price rises, okay, price goes up, stop price goes up as well, because it's moving, it's trailing the market, okay? But if the currency price falls, that stop loss stays in place at the best point that it ever reached. So, like I said, if a stock goes from $5 to $6 and your trailing stop was at $4 and the market moves up $1, well, that trailing stop is just going to move up to break even. Now, if that's the very best point the trailing stop got to, it will stay there. So the market can come down, maybe it goes down to $5.50. It's still at $5. It hasn't moved. And the only time you can get that trailing stop to move again is if that trailing stop goes beyond its highest point. So it gets back to $6, still hasn't done anything. But if it goes over $6 a share, that's when the trailing stop will start to engage again. It'll start moving, but it will always stay at the very best point that it ever got to. So if the market does pull back, you are going to stop out on that trade. So it's important to understand that. All right. Okay, I think everybody gets that point right there. So how to set this up on MT4 and TradingView. Let's go ahead and do this. So let's do that. Let's actually do the TradingView slash web trader option first. So I've got this pulled up here. Yes, I have this pulled up here. I want to take a trade with you guys just to show you the example. So let's start with web trader. So this is Owanda. I know not everybody trades with Owanda, and that's fine, but this is their web trader platform. This is where I do a lot of my personal trading, is on this particular platform. And I think it's also important to note that the way this web trader works is very similar, if not the same, as how TradingView works. So if you connect your account to TradingView, a lot of the functions and the order window will be the exact same. So I just want to make sure everybody knows that. So if you're in here, if you're in Owanda, how do you set this up? So let's say, here's the NZD yen. Let's say you want to buy the NZD JPY, okay? All I'm going to do is I'm going to click this buy button over here, okay? And I'm just going to put in, I don't know, I'm just going to put in just a micro contract, so 1,000 units. So nothing huge, this is just to show you how to do it, okay? Okay, so let's say, once you've done that, you can then go ahead and place a take profit. I'm not aware of anything like a trailing take profit. I don't think there's such a thing as a trailing take profit. I'm not sure how or why you would use one, because it's just not how the market works. So that's why you don't see that as an option. But down here is where you can see the stop loss. Now, right here, you can put in the exact price that you want to stop out. So with a normal stop loss, you can just say, oh, well, my stop loss, let's say it's going to be 1.10, or it's going to be, I don't know, just whatever you decide it to be. Let's say 82, right? 0.00. Right, that's a price stop loss. And if the market were to ever engage or touch that price, you would lose money, right? But it would indeed stop you out. Another cool thing too, guys, I want to show you, like, for example, if I put that back in as 82.00, one of the things I love about the web trader platform is this. It shows you right here. I don't know if you guys can see it. I just highlighted it right here. It shows you the amount of money that you could potentially lose on that trade, which is super nice because I can't tell you how many times I've fat fingered the units button right here. If you put an extra zero, look what happens. That number went from $24 of loss now to $244. If I fat finger that again, put another zero in, all of a sudden, if that hit, I would lose $2,442, right? So that's not good, right? So it's kind of nice to double check your work. So if that seems like a loss that is more reasonable, then you've probably got it set up correctly, right? Now, that's one way to do it, is through price. Now, I don't do price a lot. I like to do things in pips, which this is a functionality that's pretty unique to the web trader and TradingView. Okay, MT4 can't do this, unfortunately. But right here, if you click here, you can put it in pips. So let's say the NZD yen has a 100 pip stop loss. Okay. Now you can see my risk here is $7.16 if that loses, right? It's 100 pips. Okay. I just put that in and I'm good to go. Now, if I were to hit submit, I would basically buy one micro contract of the NZD JPY with a 100 pip stop loss, and it's just a normal stop loss. Now, if I want to put in a trailing stop loss, I have to click on this little plus button, and then I click into this field where it says pips, and now I can put in a trailing stop for however many amount whatever I want to put it in terms of pips. Now, some people think you have to put in exactly, if you put in a 100 pip stop loss, you should put in a 100 pip trailing stop. Not necessarily. I like to put in a trailing stop that's 100 pips. If my stop loss is my regular stop loss is 100 pips, I'd like to put in a 100 pip trailing stop. So I'd put that in too, because that would keep everything the same. But technically you don't have to. You could actually have your trailing stop be 50 pips, okay? Or 60, whatever I put into there. Okay. You could actually, what a lot of people do is they might have their trailer a little bit further away, maybe like 150 pips away. And so the market would need to go in your favor quite a bit for that trailing stop to engage, basically. So you could do something like that. If you did something really tight, like 10 pips, it's almost like there's no reason to have a stop loss in the first place, because that trailing stop is definitely going to hit first, right? Because it's way closer than the stop loss. So that's why, I mean, for me, I typically just, if my stop loss is going to be 100 pips, I just keep it 100 pips. That's what I typically do. Who knows? Maybe I'll change that in the future, but this is what's worked for me. If my normal stop is this, then I'll put in this and I'm good to go. Okay. But just remember, your trailing stop is not going to engage just because you put in a stop loss. You have to go in here, click the plus button, and then put in the amount that you want. And then you click submit and it's ready to go. It will then engage. And what that means is if I submit this trade, that means that if the market goes in my favor, 50 pips, as an example, the trailing stop will come up 50 pips. So if that's the case, where could I stop out on this trade now? Well, the market would still have to go against me 100 pips from the plus 50 that we've got. It'd have to go against me 50 of the plus that I just made, plus another 50. So it'd still have to go against me a total of 100 pips to stop me out on that trade. Okay. So it's always maintaining that 100 pip difference or distance, unless the market starts to go against you big time. So I've had trades that I've taken that were unfortunate, where let's say I take the trade and immediately it starts going against me. Those types of trades, the trailing stop really doesn't do anything, because if the market just starts going against you right away, you're just going to hit your normal stop loss. So the trailing stop is only useful if the market goes in your favor at all, right? That's when it's useful. Okay, so let me actually submit this trade as is. And if I go ahead and hit submit, it's going to show up here. Here's the trade. So now you can see the trade right there. Oh, and actually, I think it moved. Let's see. Let's take a close look. Let's kind of zoom in. If we can get this market to move up just a little bit, it's kind of late in the day, so I don't even know if we're going to get a move big enough. But if we could get this market to move up just a little bit, you'll actually be able to see that trailing stop move up automatically. Let's see. I don't know. We'll have to see if it can do it. So what we'll do is we'll leave this here. Just notice how the trailing stop is at 84.399. Or excuse me, the trailing stop is at 84.421. I actually think it did move just slightly right when I hit submit. But yeah, it's at 84.421. So if we come back, I'm going to go show you how to do this on MT4. But if we come back and we see that that's moved from 84.421, then we know that it did move while we were away. So let's go ahead and show you how to do this on MT4 next. So I've got an MT4 platform pulled up here. Now, a lot of people trade on MT4 just because it's one of the oldest platforms around. It's pretty much every Forex broker out there uses MT4. A lot of the, if not all of the prop firms out there offer trading on MT4. And so you kind of, if you want to pass a prop firm challenge, you have to at least know your way around MT4. I mean, I probably don't even know what every button does on MT4 because there's a lot of stuff here, but I know my way around enough to kind of know what things do, right? So that's what I want to help you guys do here. So let's say, here's the NZD CAD. Let's say we want to take a trade on the NZD CAD. We want to buy. What I'm going to do is I'm going to click new order. Okay. And with this, you can put in whatever contract you want. Let's just do a micro again. So 0.01, that's the smallest you can do. Let's do a 0.01. This one doesn't give you units, which kind of stinks. You have to do it in contracts. So we'll just do 0.01. You can put in your stop loss here as a price, but you cannot put it in as pips. You can't put in a take profit or as pips. It has to be in terms of price. So you have to pick a level where you want it. So let's say I did my math here and I figured out what my stop loss was supposed to be. Let's say, let's just say 0.81 would work. So I'm going to do 0.81000, and that's my stop loss. So I can't actually put in, just so everybody knows, I can't put in my trailing stop right now. I can't do it. I have to do it after the fact. So if you know that that's the price where you want your stop loss, then you can go ahead and just hit buy. So I'm going to go ahead and hit buy, and the trade is in. Okay, so I have a stop loss down here and I have a buy up here. Now, let's say you don't know what that number is, like what your stop, how many pips you're risking. You can just grab this measuring tool up here, this crosshair, and measure from the current price down to here, and you can see it. They do it in points. So you can see I've got 819 points between my entry and my stop loss. It's that middle number, if you can see it. Yeah, 800, and we'll just say 812. So if I have 812 points, that's just 81 pips, because points are a tenth of a pip. So if I have 812 points, it's just 81 pips, right? Okay, it's just 81 pips. Okay, so I have 81 pips here, and you can measure that. Let's say that that's fine. You're okay with that. If you wanted to change that, you could actually just drag your stop loss. You can just grab it like this, and you can move it around. So I can pull it up here, I can bring it down here, I can put it wherever I want. They actually have a cool thing too, on MT4, where you can, if you look to the right as I drag this, notice how I'm dragging this. It says the order number, and then it says stop loss, and it tells you the amount of dollars and the amount of pips slash points that you're risking. It shouldn't say pips, honestly. In fact, that's very misleading that it says pips. No, that's the amount of points that you're risking. Yeah, so if you bring it down here, that's 1,000 points, which is 100 pips, right? So let's say we're gonna actually, let's just do it to 100 pips. So that'll be 1,000 points, which is about right here. So that's 100 pip stop loss right there. Okay. Now, we want to place a trailing stop, right? Because if I just leave this on, this market can go up, it can go down, and the stop loss is not going to move at all. So if I want to put in a stop loss, a trailing stop loss, excuse me, I'm going to right click on my order down here in the terminal. So I just right click, and then I come up to where it says trailing. Don't click on anything, just come over here and then go down to custom. Okay, this is where you can put in a trailing stop. Now, you'll notice, yeah, the minimum trailing stop is 15 points. That's actually just 1.5 pips, so everybody knows. That is a ultra tight trailing stop, 1.5 pips. That's nothing, okay? I don't know why you would use that. So you want your trailing stop to be bigger than that. If I wanted my trailing stop to be the same as my stop loss, which is 1,000 points or 100 pips, I would put in 1,000. And then that would be my trailing stop. Now, here's the issue with MT4, and a lot of you have found this, and you guys probably know where I'm going with this. So one of the big issues with the trailing stop on MT4 is it doesn't move. The trailing stop doesn't engage until the market has moved the same amount as as the indicated trailing stop that you're putting in right now. Let me re-explain that and kind of maybe explain it in an example. So let's say we just took this trade. We have 100 pip stop loss, okay? And this market goes in our favor 20 pips. Normally, on a web trader platform, the stop loss is going to move up 20 pips, right? The problem is on MT4, it doesn't. And you're like, well, wait a second. I thought this thing was supposed to trail. Yeah, I found out the hard way. It doesn't work that way. So on MT4, the trailing stop, what it does is the market has to go in your favor. Let's say you put it to 1,000 points, which is 100 pips. So if the market moves 100 pips in your favor, then the trailing stop will start to move, right? So it won't start moving until the trailing stop, until the market's moved insofar that it's reached this amount. Okay. Let's say it does that. Let's say the market does that. You click OK. In fact, let's click OK here. You'll notice that my stop loss is now in yellow right here. That means a trailing stop is engaged or at least ready to go. So let's say the market comes up 20 pips. So it goes to about, 20 pips is about right here. Not much. Let's say it goes to right here. Where's my trailing stop if it's there on MT4? It's still where it was before. Nothing's changed. Let's say this market goes up. Let's say it goes up 50 pips in your favor. I'm going to double click on this. Let's say 50 pips is about right there. Okay. Where's my trailing stop now? If it's moved 50 pips and my trailing stop was 100 pips, nothing's changed. It's still where it was before. Let's say it goes up to 75 pips in your favor, which is a bunch now. Now you got some real good profits on this trade. Put it to there. That's 75 pips. Still hasn't moved. Okay. Now this market moves 100 pips in your favor. So you had an original stop loss of 100 pips, and now it's moved 100 pips in your favor. Now where's your trailing stop? It's at break even. Okay. So the trailing stop doesn't move until the amount that you indicated is where the market gets to. So if the market moves 100 pips in your favor, and that was your original trailing stop is 100 pips, the market will be up here 100 pips in your favor. You'll be up a bunch on this trade, and then your trailing stop will get placed at break even. And then it will actually start to act like a normal trailing stop. So, if the market goes another 10 pips in your favor and you're up 110 pips in your favor, now your trailing stop is actually 10 pips above break even. Let's say this trade is one of those big trades like we had a couple weeks ago where we made 300 pips on just the dollar yen long position, right? Let's say by Friday, we're up 300 pips on the dollar yen. Where's your trailing stop if it's 100 pips? It's actually up 200 pips. I hope this is making sense. I know it can be kind of confusing, but if you're up 300 and your trailing stop was 100 pips stop loss or trailing stop, it's got a 100 pip difference or distance between where the market is and where the trailing stop is or was. So that's 100 pip distance. Okay. But it's important to understand this, that if the market only moves a little bit in your favor on MT4, so this is, by the way, only on MT4. If it only moves a little bit in your favor, trailing stop is not doing anything. It's just a regular stop loss. So it has to move in your favor a certain amount before it will actually go to break even. And that's where it goes. It will either be at your stop loss or break even, and then it will start to move up gradually. I don't know why they did that. It actually really bothers me because the way I've always understood trailing stops, the ways I've always traded trailing stops on different platforms with different brokers, it's always been just if the market moves in your favor at all, it would go in your favor. Like the trailing stop will just move proportionally. This one with MT4, it has to go in your favor a certain amount, and then it will engage. So just know that, and it will make more sense in the future. So one of the recommendations, and I'm glad some of you are here because a lot of you trade the COT report with me. One of the things that I have been doing, and this is what I do on my copy trader, this is how I manage my own money on MT4 when I'm using a trailing stop. If my normal stop loss is, we'll say again, 100 pips, we'll do that as an example. Let's say it's 100 pips for the week. That's my week-long stop loss. I will then use a half an average daily range trailing stop. So we know that this is a 100 pip distance between where the market is right now and where this stop loss is. That's 100 pips. So if it's 100 pips, I want to do half that, which is 50. So we want to do a 50 pip trailing stop. So if I wanted to do this, I would right click on my trade, go to trailing, go down to custom, and I'm going to change this to 500 points, which is 50 pips. And then I would click OK. And now my trailing stop is 50 pips. And it's no longer my trailing stop is 50 pips. So basically what this does is it will expedite my trailing stop to engage a little bit faster once the market moves in my favor. So let's say this market goes in my favor, you know, right to here, which is about 50 pips. So once it gets to here, let's draw this line again. Let's say the market gets to about right here. That's 50 pips away. If it gets there, then my trailing stop, which is down here, this stop loss, will go right to break even. And then hopefully the market just continues to go in our favor at that point. If it doesn't and it pulls back, then it's by all means, well, then it just stops me out. I'll lose money. It'll just stop me out. Okay. So that's how it works. Okay. On MT4. And again, we can complain all day, you know, how that's dumb. I totally agree. Because the superior way, in my opinion, is this way right here, which, by the way, look at this. This has moved in our favor. So we're up a little bit on this trade, up 4 cents. Yeah, I know, yippee, we're up 1 cent or 4 cents. This is now up 84.426. This was at 84.421. So our trailing stop has moved up about 5 points just while you and I have been, you know, working on the MT4 option. It hasn't moved up a lot. I mean, hardly noticeable, but it has moved. And it happens automatically. This I love. I love that because as the market progresses, it's cutting down your risk, you're saving money, you're preserving capital automatically while you're away from the computer, while you're asleep. This process is happening, right? I love that. You may even want to look into if you're going to go with a prop firm, you may want to look into a prop firm that allows you to trade on TradingView and connect to TradingView if you can, because to me, that's worth it. But if you can't, you totally can do MT4. My copy trader, which I'm using which I told you guys about, the copy trader is only connected through MT4. It's the only platform that accepts copy trader. So if you want to take advantage of the copy trader service, you have to be on MT4. So that's what I'm saying. You might as well get familiar. If you're going to be a long-term trader, you might as well get familiar with the two platforms and the nuances between the two, because it is different, right? Okay, what else did I want to discuss here? I think that's basically it. Let me know. I'm going to answer Wesley's question here, but I want you guys to, if you have other trailing stop questions in the meantime, please ask those questions while I'm still in this webinar here. Plus, I'm sure there's people watching this right now on the recording that are going to want their questions answered. Actually, I just thought of one question that I got that I want to answer real quick before I go and answer Wesley's questions. But one of the questions I got this week was, under what kind of strategies, what kind of market conditions is it smart to use a trailing stop, and then what other strategies would a trailing stop not be good for? And this is a great question. So you'll notice that I use the trailing stop a lot for the COT report. Now, why is that? So trailing stops are really great for strategies that have a little bit more of a liberal stop loss, something that's a little bit bigger than usual, something that's more long term, that's trailing a trend, right? If you're trend trading, trailing stops are fantastic. If you're just looking for a quick scalp, a quick little reversal in the market or a quick little opportunity, trailing stops are usually not that great. Okay. But yeah, if you're trend trading, which the COT report is all about capturing a trend, right? Where we think we know what the banks are doing this week. So we're trying to follow the banks and we want to put in a position that will trail the market as it trends throughout the week. Okay. So that if the market pulls back on us in a big way, we can protect a lot of the capital that we've already made, or the profits that we've already made. We can protect a lot of that. Okay, that's where a trailing stop really comes in clutch, and it's really nice. But as you guys know, they can be bad, and the cons can outweigh the benefits if you have a market that's choppy. So if you have a ranging market, what happens in a ranging market? Well, the market goes in your favor and then it immediately goes against you. Well, if it goes in your favor and immediately goes against you, you're going to get stopped out, and maybe it goes in your favor again just right after that, right? So a choppy market is usually not that great for a trailing stop. Now, I am grateful. Let's say, for example, I've had trades like this. This just even happened last week. So I had a couple of trades lose last week where I took the trades at the beginning of the week. They went in my favor initially. Trailing stop came up to protect me from some of that risk. And then by the end of the week, the thing just collapsed. It just went way against us. Well, fortunately, because the trailing stop had come up, stopped me out when it came back down at a very, minimal loss or even some profit. And then the market can do whatever it wants the rest of the week, and it doesn't matter. And fortunately, on a week, on a down week, it's kind of nice that your trailing stop got you out before a lot of that other junk came into the marketplace, right? So that's an example where it's kind of nice, but it does stink. There were some trades from last week where I got stopped out a little too early, and then lo and behold, by the end of the week, you would have been more profitable had you stayed in those trades. So it's always going to happen. So I think basically ask yourself this question: is this a trend trading strategy? Is this something that's going to trade a trend and capture a large market move? If so, maybe a trailing stop makes more sense. If this is a scalp strategy where I'm trying to capture a reversal, I'm trying to capture a fade or some kind of quick market move with a tight stop loss to begin with and a very big reward tied to it, trailing stops are not good for that type of market condition. Okay. So I hope that answers that question, because I know that was another question that a lot of people asked me. So when I'm taking these trades, this kind of segues into what Wesley's asking. When I'm taking these COT report trades, these week-long trades, trailing stops make sense. But if I'm going to try to do a separate trade, a more conditional trade that's based off of a very liquidity zone, and I'm trying to get in at a support level with a tight stop loss, big target, not a good idea to use a trailing stop, right? So Wesley says, if you have time, can you show how to manage two separate trades on one currency pair? Example, I'm already long due to trading the COT report, then I want to place an additional trade on the same pair. Yeah, so a couple of things on that specifically, Wesley. So you don't necessarily have to take the second trade if you don't want to. So when I'm trading, I have, I think, three different accounts. Yeah, I have three different accounts where I trade the COT report weekly trades, and also a few additional. Sometimes I'll take that additional, non-commercial trade as well, or a couple of those, but they're just allocated for the COT report. So for example, one of the things I'm doing right now is I have one of my accounts listed on my FX book because I'm trying to market and show people that this works, right? And so I don't convolute that account with other strategies and other things that we do because I'm trying to show, hey, look, if you just trade only the COT report, these are the results if you trade it for 6 months, a year, 3 years, right? So I have accounts that I just use that on. Now, some people have one account. They don't have multiple accounts to trade. So what do you do in that situation? And I really think it just kind of comes down to a question of, what are you comfortable with, right? Because not everybody should take every single trade. I think you have to kind of decide what's your game plan. Is my game plan to only trade the COT report trades, or is my game plan to take some more additional trade setups in the same account? You can do that. That's not a problem. Just know that if you're going to take that second trade that we posted this afternoon on the same pair, you're going to need to use a lot size calculator for each one. So, hopefully you did that yesterday or this morning with the first trade we posted, which is the COT report trade. Hopefully you've got used a lot size calculator and you did 1% risk or less or something like that. And now you're just gonna let that trade sit all week, right? With the second trade, you'll do the same thing, right? You'll use a lot size calculator, but what you'll notice on the second trade is because it has a much tighter stop loss, 1% risk on a tighter stop loss is going to have a much larger, you're going to have a much larger contract. Does that make sense? Contract's going to get bigger. So, anyway, I hope that kind of makes sense with what I'm kind of saying there. Oh, 1 second, guys. I was like, I'm getting a phone call here. Okay, we're good. So yeah, you'll have a much bigger contract if you're taking that second trade because you're gonna have a smaller stop loss to begin with. Does that make sense at all? I hope it does. If not, maybe I can explain it a different way. So if that second trade loses, you'll end up losing the same amount that you would lose on the first trade because you used a lot size calculator, but you're more likely to lose that one quicker because it has that tighter stop loss to begin with. Whereas the first trade has a bigger stop loss, the difference is much bigger, so you may not lose it as quickly. Anyway, hope that makes sense. Let me look at this. It looks like this is moving in our favor a little bit more. No, this one hasn't changed. I thought this one. So this trailing stops is still at 84.426. Anyway, just wanted to take a look at that. Yeah, I hope that makes sense, Wesley. But yeah, you can certainly take 2 trades per pair if you want, or you could do what I do is just I have different accounts for different things. I do my more aggressive trades with the tighter stop losses in a different account. And then I have other accounts where I trade just the COT report. I actually am working on another system where it's just looking at sentiment. So we're looking at sentiment indexes to find out what the net daily change is in sentiment. And I plan to use a whole different account just for that strategy, right? One of the things that I think is valuable, and I'm going to end on this unless you guys have other questions, but one of the things that I think is valuable about having different accounts is it helps you see how you're doing. Because I used to trade everything in one account. I'd have my stock trades in one account, my Forex trades, the 5 different Forex strategies trades in one account. And what would happen is I wouldn't really know how I was doing. If one strategy was suffering one day and another strategy was doing well, I wouldn't know how my long-term outlook was across all those different strategies, right? So it is kind of nice to separate your back test and your forward test just separately, right? You would never back test 3 different strategies on the same spreadsheet. Do you see what I'm saying? But we do that all the time with forward testing. You know, people have their strategy for this and their strategy for that, and they all trade it in the same account. And that's like literally just back testing in the same Excel spreadsheet, right? That's not going to be helpful, right? So that's why I'm a big proponent of having different accounts for the different things that you do. And then what you'll find is, holy moly, this other strategy is really consistent and I'm a lot better at it. Maybe I'll allocate more money to that account, right? Let me pull up, let's see, did this move at all? No, that hasn't moved yet. Okay. Wesley says, if I understand correctly, it will show as 2 trades, not 1 average price. Okay, great question. Yeah, and that's actually another problem of trading in the same account. It won't until the trade executes. Yeah, that's a great question. So I know on here on Awanda, and I think it's the same. No. On MT4, I believe, no, it's the same as well. So no, it'll show in the order section, you'll see 2 different trades. But on the actual chart, it'll look like it's 1 trade after they execute. Now, before it's executed, because it's just a pending order, it's just going to show up as 2 separate trades until both are executed at the same time. I hope that makes sense. And that actually is another problem with having multiple trades on one account. So that's what I'm saying. If your big focus is just trading COT report, you might as well just trade the COT report only, unless you have another account where you can back test and forward test some of these other strategies like trading price action. That's how I've always done it. So I would either, if you're just going to have one account, just pick to the one thing that suits you best, or maybe get 2 separate accounts, because it can kind of get confusing having 2 or 3 different strategies going on in one account. But yeah, great question. Great question. Really good things to talk about that can get very confusing. So, all right, guys. Well, I'm going to probably go ahead and wrap up with that. I think this was a very productive class. And I think we answered a lot of questions on how to set up these trailing stops, because it can get confusing. And if you have other questions, feel free to call or text me or just message me and we can chat about your specific questions. I am going to post this, so if you need to go back and watch the recording, you can even go to certain parts of the recording and rewatch those parts so that you can at least understand what we've talked about today. So, all right, guys. Well, I appreciate your attendance today. Thank you for coming. Have a fantastic rest of your day, and we'll see you in the next webinar.